Hugh. Should investors be more focused on the news flow out of D.C.?
No, I don't think so. In fact, I think it's hurting people's rational assessment of the economy, which remains quite strong in the United States, despite trouble in China and, of course, the EU's crack-up. Most of the bad news today, I think, comes from the leadership of the European Union basically telling Britain to pound sand, and we're going to see some dislocation there. But the stories about the president and impeachment, there's an incentive on cable, there's an incentive in print to say increasingly alarmist things about how rough it's going to be. Divided government's actually the rule, not the exception in the United States. We figure it out going forward. There are some old hands there in Mitch McConnell and Nancy Pelosi. And although the president is certainly an unusual commodity and very energetic, as well as charismatic, as well as divisive, as well as destructive, he doesn't drive the economic bus to the extent that a lot of people do. So I think there's a lot of hand-wringing that is overstated at this point.
Although, Hugh, I mean, we're certainly not coming up with this out of thin air. You know, there's divided government, and then there's the type of rhetoric that we're hearing about what the plans are for the Democratic House, at least in a couple of weeks' time. Are you telling us that we should disregard all of that as noise and that it's just going to, you know, fundamentally everyone's going to hold hands and work on infrastructure spending?
Yeah, about 90% of it is noise. And I base that on the change in the Congress in 2010 when President Obama got wiped out. The Democrats lost 63 seats. And on 2014, when the Democrats lost 9 Senate seats, President Obama continued on in his package with his basically 1.5%, 2% growth GDP. And the underlying economy is not impacted by the political spitballing that goes on in Washington, D.C., between committee chairmen and the executive branch. So Jerry Nadler thinks it's great. He's the chairman of the incoming House chairman of Judiciary. He thinks it's great to go on TV and threaten impeachment. Guess what? Bill Clinton got impeached. He didn't get removed. It just doesn't happen. And so the president's going to finish this term. He might get reelected. We're going to have a lot of fun on cable talking about who did what to whom, when, whether it's a crime.
Listen, I'm surprised you think that the president has so little impact over the U.S. economy, which of course, it's a $17 trillion economy. But as we saw from the Obama years and as we're seeing already in the Trump years, the direction of their plans makes a big difference. You know, with the tax reform this year, the deregulatory push, you don't think that that's a major issue here? I mean, look at the market right now. We're down 525 points right now. And the question is whether the U.S. can sustain the growth that we've seen with the rest of the world looks like tipping into recession practically.
Well, I just trust the Fed, and when they project 3%, I go with the Fed on 3%. I do believe that the tax impacts from the reform of last year only have begun to kick in, especially on the individual level. They don't even have clarity yet as to what happens to, say, for example, Subchapter S investors. They really don't have much of an idea of whether or not they're better off or worse off after this tax reform bill. I think we tend to overstate everything in the media because there's an incentive for us to do so. That is to get more eyeballs tuning in. And a 500-point drop, that's not a great day for an investor. But I also think next week might see a 500-point go up.
No, of course, but we're talking about the numbers out of Europe overnight, which you look at France, it's contracting for the first time in several years. Germany's manufacturing and services data, the whole European. And so if that malaise is for real, you know, we're not just making that up. The question is, can the U.S. can U.S. consumers, as Steve was suggesting earlier, continue to just hum along in this great economy or not?
Yes, I think they can. I believe the United States economy. I believe the Fed. Europe, I said at the beginning of our conversation, is a problem because Juncker and Tusk are intent on punishing Great Britain for leaving the European Union. But just today, for a counterfactual, Liam Fox, who's the Minister for Trade in Great Britain, executed a new free trade agreement with Switzerland. What Britain is going to go out and do is become the Singapore of the Atlantic, and that's going to be a great thing. It'll take a couple of years, 3 years to get there. I just don't see panic internationally. I do see problems with China. They are very aggressive. Ambassador Bolton gave a speech at the Heritage Foundation yesterday that laid out the fact that the United States and China are on a collision course. And that's not a small risk. And that is something worth worrying about.